In past shows, you've mentioned nibbling at the market, gain small portions of the investments and back into the market. What signs are you looking for to nibble? Is this a fundamental sign or a technical sign?
Yeah, it depends on what you call fundamental. For me, fundamental is overall market fundamentals, and I would include the Treasury yields in that personally. And so, would love to see the two-year Treasury start to, keel over. That would be a strong nibbling standpoint. The inverted yield curve kind of correcting itself would probably happen at the same time. But in essence, watching what's happening in the bond market as a key indicator for what you might do in the stock market. And then obviously, we're looking at a scenario where potentially something really falls a lot. The S&P 500 comes down, and I use a stretch index, and so you get that big stretch. I would nibble at that. I would buy that stretch at this point in time to the downside. We haven't had that, right? We've been, we haven't had it recently anyway. So the technical pieces, we have a lot of different indicators, moving average crossovers and trend lines, a whole bunch of ATR trailing stops, Bollinger Bands, a whole bunch of different pieces that we look at. And so as each one of those kind of triggers, we would probably take some action on that and just kind of slowly but surely moving back in. And one of our biggest triggers is a moving average crossover, which seems to have worked pretty well so far this year. We're not that close to that right now. We are kind of close to some of the earlier indicators, like the Fisher transform indicator, which moves quite early and quite often, has actually turned positive this week, for example. We've had a couple of Bollinger Band breakouts, for example. We have that on Apple right now, but no other confirming, evidence that we're coming out of this. But, those are the types of things we look at. So both fundamental and technical. I would probably be really reluctant to go fully back into the market if the two-year Treasury was still going straight up like it is now. I can't see that working because the bond market and the stock market are disagreeing with each other, and the bond market often is right, especially in these type of environments. So, yeah, it's a good question.